Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 1.9% year to date as of March 16th, 2024. Our color stock market strength signal is green, and we compete against the S&P 500 buy and hold investor, whose portfolio is currently up 7.26% year to date. So we are behind them, and we got to catch up before the end of this year. Here are some past results for Spy Trader Now. And last week, the S&P 500 lost 0.06%. You can see here that we are in this ascending trading range, and it doesn't show it on this chart, but we're just starting to break out of that. And I did a trade. I'm going to show you that right now. So we made one trade last week. That trade was on Friday, 3/15/24, and what we did was we sold to close the one long call option that we had out there. We made some nice cash on it with a 42% return on investment for a 24-day trade. Here are the current trades we made in 2024. That last trade that we just closed out is this one right here, and we made $731 on this $1,700 trade, so we did really well. Now we currently have 200 shares of SPY, and we're profitable by $4,400. And we also have an in-the-money covered call. Now on that in-the-money covered call, we are negative $3,442. So the expectation is that we're going to have a 10% correction in the stock market. I'm guessing at 10%, but we'll see what the actual percentage is sometime between now and the end of the calendar year. We will buy to close this out. As the market drops, this negative 3,000 will shrink to negative 2,000, negative 1,000, and ultimately we'll close that out, and then we'll be able to take that cash and buy some long calls, and then when the market goes long, we'll take on more leverage. So that's the game plan from a high elevation standpoint. If you want, stay tuned, see how I do this throughout the year. Hit that subscribe button, ring that bell to be notified when I post a new video. Smash that like button down right now and do me a solid. Here is the equity curve for the model portfolio for 2024 year to date. Here is the equity curve of the buy and hold investor for 2024 year to date. And you can see that it's practically a straight line up. Now they've been tailing off, the last couple weeks here. Here are the two equity curves combined. Now our goal here is for our blue portfolio to be above this pink portfolio of the buy and hold investor. So ultimately that's where we want to get before we get to December 31st, 2024. All right, here's the Fed Chair Jerome Powell. Well, guess what? This week coming up on March 20th, there is going to be a Fed announcement. What is the Fed going to do? Is it going to be a 25 basis point rate hike, a cut, or a skip? Well, there's no way it's going to be a hike. So it is possible that it is going to, I think that the highest probability, quite honestly, is going to be a skip, because we're seeing some inflationary numbers that really would not look good for him to cut interest rates. That's what I'm thinking, but we'll see what actually happens on the announcement on March 20th. Now we're looking at things from the presidential election cycle theory. Currently, President Biden is in the fourth year. Historically, for the S&P 500, that average is 6.7% for the whole year, folks. Currently, the market, the buy and hold investor, is up 7.26%. Giving plenty of room for this market to come up and down, or down and then up, to meet that historical average. But I highly doubt we're going to stay flat between now and December 31. Now we are looking at things from the bond market, and the bond market is saying to stay out of the stock market because we have an inverted yield curve, which is a 100% in the past has proven to be a precursor towards an economic recession. Not necessarily a stock market decline, but most likely a stock market decline. In addition to that, we have rising interest rates. So that's what the bond market is telling us. This is Warren Buffett, the Oracle of Omaha, and this is CNN Business Fear and Greed Index. Currently, we are in greed at 70. Last week, we were at 66. So greed is increasing. Now we're looking at things from a seasonality outlook for the month of March. Here is a 20-year seasonality graph that shows you 75% of the time, going back 20 years, the S&P 500, symbol SPY, has closed higher than the month than when it opened for the month of March, 75% of the time. Currently, we are up 0.66%. So we're already meeting this historical average. We'll have to see how the month plays out here. All right, now we are looking at a long-term 20-year monthly chart for the S&P 500, and we are in a long-term bull market as long as these conditions here are met, and they are clearly met. This is an unsustainable vertical straight up to the sky momentum, and you can see we've lost that momentum, and I'm expecting it to flatten out or even actually more likely come down. That's that 10% correction ultimately I'm looking for. Now we're looking at a 5-year weekly candlestick chart, and here you can see that upward trading channel that we're currently in. Look at that, just unbelievable, nice straight run. You can see how we've lost momentum on the MACD and flattening out at a very high level of 19.88. This is over 5 years, you have never seen it that high before. So the high probability is we're going to flatten out and start to come down. Now we're looking at a 6-month daily candlestick chart, and here on Friday, look what happened. We came slightly out of the lower support line that I have drawn. Now, does that mean that we're going to stay in this open space and continue to fall down? No, it doesn't. It's very possible that next week this is going to come back into this channel. But I sold, I bought to close, I sold my long call, and I did that because we dropped out of this channel, and I sold it on Friday. Because just in case this market begins to fall down, then it's going to possibly come down to the 38.2, the 50, or the 61.8 on this Fibonacci retracement. And I wanted to secure my profits in this high zone area here before we got anywhere near a 38.2% pullback. So we'll see how things play out during the week. Now, we have the Fed announcement this week. And if things start to soften up before the Fed announcement and after the Fed announcement, that's telling you that this market is definitely in for its 10 to 15% correction right now. But we need more information or more cards coming out of the deck before we can make that assessment. I might be early to the party, and I could be wrong with my sell on Friday. All right, now we are looking at a risk-off chart. This is a ratio chart of the NASDAQ 100 to the S&P 500. What is this chart telling you? It is absolutely telling me that we are in a risk-off environment. Look at this thing dropping like a rock. So another reason to support my selling of my long call. Now we're looking at another ratio chart, and what is happening is the MACD looks like is definitely flattening out and possibly going to go down. This is, generally speaking, not good. You want the MACD to be going up like this, and that would be more bullish for the market in general. You can see that so the ratio chart is the one in black and red. The dark blue is the S&P 500. Lime green is the equally weighted S&P 500. Both the equally weighted and the cap weighted are up here in the trees, and they could potentially fall like this. and we want to be careful that we are not long with options, long call options during that time frame. Now we're looking at the VIX Volatility Fear Index. We are currently in the ultra low range, which generally speaking is bullish, but we're trending up. So we want to watch this. All right, now we are looking at the Thinkorswim platform. This is a 5-year weekly chart, and we are trending up very nicely, as you can see, but look at how we're starting to taper off here. You'll see that more clearly in the next 2 charts. Oh, and by the way, this chart also has standard deviations, +2, -2 in gold, +1, -1 in pink. Here's some information about standard deviations. Now, same thing, except it's a 1-year chart daily, and you can see how we did not reach the +1, started to flatten out, and we're just starting to drop down. We'll see if this continues. You can see it real good now in the 6-month chart, how we just slightly come down. It is a doji candle, which represents somewhat of an indecision, but we'll see what decision the market decides to make next week. Now we're looking at a chart that I have asset classes and the 11 S&P 500 sectors. And I'm trying to determine the health of the market in general. This is how the information that I'm getting to input my numbers in, and then we come up with the ratio down here. And then we compare that against last week. So we are losing a little bit of strength across multiple asset classes and a small amount of loss from the 11 sectors, but still 92 is an extremely strong representation. Now we are looking at a 1-year chart of the 10-year Treasury bond yields. And I thought we were going to stay in this low range, but we jumped up above it. And now we are hitting a resistance ceiling. If this breaks out above this resistance line and comes up into this space, that's going to be negative for the market. Now the dark blue line is the S&P 500. And you can see that we had this lower support line here. We just broke below that from last week's trading as of Friday. We need to see how this is going to play out. All right, this is the end of the video. I just gave you a ton of information about this market. March 16th, 2024, the market summation, according to me, your friendly host Ken with SPY Trader Now. The market strength has been strong, but I do see some topping formations happening and a clear breakdown in the risk-off indicator. I showed you that in the chart. So I decided to close out my long call for that nice 42% profit. I do want to see if the Fed meeting will shake this market up, which I'm suspecting it will. Something's going to happen this week. We're either going to break down or break out. I can't see us going sideways, but the market will tell us what it's going to do. I hope you got some valuable information out of this video. If you have not done so already, hit that subscribe button, ring that bell to be notified when I post a new video, and smash that like button down for me right now. I thank you and I wish you good trading.